Okay, let's talk about building real wealth. I mean, forget the hype around stocks or crypto for just a minute. We're diving into something that's been a powerhouse for centuries: real estate. And today, we're going to lay out a super clear, simple blueprint to help you get your start. So, you ready? Let's do this. I mean, this is the big one, isn't it? How do you actually build wealth that's going to last a lifetime? Something that goes beyond just paying the bills month to month. It's a huge goal for so many of us, and honestly, that's exactly what we're going to tackle right now. And for literally centuries, one of the most powerful answers has been right in front of us: real estate. Now, this is so much more than just buying a house to live in. It's about a proven playbook, a blueprint for creating financial freedom. And that's exactly what we're going to walk through together. Okay, so here's our game plan. First up, we're going to get into the why, the big reasons this is such a good idea. Then we'll check out the different paths you can actually take. After that, we're diving into the nitty-gritty of making your first deal happen. And finally, we'll wrap up with the long game. How to build wealth that really lasts. All right, section 1, why even get into real estate? Look, before we get into the how-to, we got to understand the why. What is it about property that makes it such a powerhouse for building financial freedom? Let's break it down. So this is what makes real estate so different from, say, buying a stock. It's a real tangible thing that works for you in count 'em, five key ways. First, you've got cash flow. That's the regular income you get from rent. Then there's appreciation, which is just a fancy way of saying the property's value goes up over time. You also get some amazing tax advantages. Then there's leverage, and we'll talk more about this later, but it's basically using the bank's money to build your wealth. And finally, it's a fantastic hedge against inflation. Pretty powerful stuff, right? Okay, section 2. Now that we've got the why down, it's time to figure out the how. Every investor's journey has to start somewhere, and that's with picking a path that actually fits your goals and your budget. Let's check out the main options. So, your first big choice really boils down to this: do you want to invest where people live or where they work? Residential properties, houses, apartments, that's the most common starting point for new investors. It's more accessible. On the other hand, you've got commercial real estate, like offices or retail stores. Now, the returns there can be higher, but you got to know it's a different ballgame. It usually takes more money and know-how to get in. All right, after you pick a property type, you need a strategy. It's kind of like asking, are you the tortoise or the hare? The buy and hold strategy, that's the tortoise. It's a long-term play, all about collecting rent and letting your wealth build up slowly and steadily. Then you have the fix and flip. That's the hare, a quick sprint. You buy a place, renovate it, and sell it for a fast profit. One is about building gradual, lasting wealth. The other is about generating a big chunk of cash right now. Okay, section 3. This is where we get into the action. We're moving from theory to execution. These are the real, practical steps that take you from just looking online to actually signing on the dotted line. This is where the blueprint starts to feel real. Look, I know the buying process can seem super overwhelming, but when you break it down, it's really just 6 manageable steps. You kick things off with research and, this is crucial, getting pre-approved for your loan. Seriously, do that first. It gives you so much power when you negotiate. Then it's about finding the right property, doing your homework with inspections, that's your due diligence, striking a fair deal, and then the best part, closing and getting those keys in your hand. But how do you really know if it's a good deal? I mean, that's the million-dollar question, right? You can follow all the steps, check all the boxes, but at the end of the day, your success really comes down to one thing: being able to analyze the numbers and see the true financial potential. And that brings us to one of your absolute most important tools, something called the capitalization rate, or cap rate for short. Just think of it like a quick report card for a property's profitability. All you do is take the income it generates in a year, after expenses of course, and divide that by its purchase price. That one little number lets you compare totally different properties, like a duplex in Dallas and a condo in Denver, on a true apples-to-apples basis. It's all about seeing where your money will work hardest. So what's a good cap rate? Well, a 6.5%, for instance, might be an amazing deal in a really hot market, but maybe just okay in a slower one. The real magic isn't in finding one perfect number. It's about using it as a benchmark to compare your options. It takes you from a gut feeling to a smart, data-driven decision. It's how you evaluate every deal with real confidence. Okay, now we got to talk about the secret sauce, the real magic of real estate investing: leverage. Check this out. You don't need to have $250,000 to buy a $250,000 house. You might only need, say, 50 grand of your own cash. The bank puts up the rest. But here's the kicker.
When that $250,000 asset goes up in value, you get to keep all of the profit, not just the profit on your 50 grand. That's how you amplify your returns and build wealth like crazy fast.
All right, so you did it. You bought your first property. Awesome. But wait, the blueprint isn't finished. This last section might be the most important one. It's all about the long game, how you protect what you've built and grow it into a real portfolio. Listen, every investment has risk. That's just part of the game. But the cool thing about real estate is that the risks are pretty predictable. Yeah, you're going to have market ups and downs. You might have tenant troubles. A water heater will definitely break at the worst possible time. And you can't just sell a house with a click of a button like a stock. So, how do you protect yourself from all that? The number one answer is diversification. Don't put all your eggs in one basket. Owning properties in different places or of different types, that's your ultimate safety net. You know, this quote really nails it. Wealth builds gradually through discipline, patience, and knowledge. This isn't a lottery ticket. It's not a get-rich-quick scheme. It is absolutely a journey, and it rewards the people who stick to their strategy, stay patient when things get choppy, and never, ever stop learning. So, there it is. Your blueprint is ready. We've laid the foundation, we've mapped out the different paths you can take, and now the tools are right there, in your hands. So the only real question left is, what's your first move going to be?